Hey everyone, it's no secret that artificial intelligence has been the most popular investing trend in 2023. The Oracle of Omaha, Warren Buffett, whether on purpose or on accident, has invested in two companies that stand to benefit from the rising effectiveness of AI. So in this video, I'm going to highlight some bigger picture themes surrounding artificial intelligence and discuss the two stocks that Warren Buffett owns in his Berkshire Hathaway portfolio that are going to benefit from rising effectiveness of AI. But also, I'm going to let you know if you can buy those stocks today, if they are a good value, if they are a good buy today for those of you watching this video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's get right into it, starting with looking at the AI market opportunity. So what I have here is a report from Statista that highlights the opportunity for artificial intelligence. The market for AI is expected to show significant growth over the coming decade according to a variety of sources. According to Statista data, the AI market size is projected to rise from 242 billion in 2023 to almost 740 billion in 2030, giving that a compound annual growth rate of 17.3%. Well, according to Next Move Strategy Consulting, that value is approximately 208 billion in 2023, and that's expected to grow ninefold by 2030, reaching 1.85 trillion dollars. And you can find estimates ranging in between those ranges and some even higher. Regardless, the opportunity for artificial intelligence is massive. Nobody knows precisely how massive it could be, but it's going to be in the hundreds of billions, if not trillions of dollars. And so companies that are in position to benefit from that trend could provide investors with massive returns. Of course, Warren Buffett's Berkshire Hathaway portfolio is dealing with hundreds of billions of its own. It's got $348 billion of portfolio value, and it's invested in a total of 48 stocks. However, one stock takes a large position in the overall portfolio, and that's one of the stocks I'm going to talk about in this video, and that is Apple. 51% of Warren Buffett's Berkshire Hathaway portfolio is invested in Apple stock, holding 915 million shares with a total market value of over $177 billion. So let's take a closer look at what Warren Buffett loves about Apple stock. In its most recent quarterly report, you can see Apple's total net sales of 89.5 billion was a bit disappointing because it was down from the 90 billion in the same quarter the prior year. But the thing that investors have been liking about Apple stock is that more and more of its revenue is coming from the services segment. And you can see the services segment is significantly more profitable than the product segment. It generates twice as much gross profit margin than the hardware segment. So as the services segment continues to grow and as a proportion of overall revenue, that's going to lift Apple's profitability longer term, and investors are liking that trend. More specifically, I think the reason Warren Buffett likes Apple stock is because of its competitive advantages. Apple has proven for decades that it can innovate. It can deliver innovative products that consumers are willing to pay premium prices for. You could look back over the last decade alone. Apple has introduced the Apple Watch, the AirPods, Apple Services, Apple Music, Apple TV Plus, and more. And so people are attracted to these new devices, new hardware that makes owning an iPhone, its core product, even more valuable, right? If you can pair an iPhone with an Apple Watch and the AirPods, now the Apple iPhone gives you more value as a consumer, and so you're more willing to own it, and the next time it comes time to be upgraded, you're not looking at a competitor, you're sticking with Apple. I mentioned already that customers are willing to pay premium prices for Apple's products, and that's been demonstrated in Apple's operating profit margin. You can see over the last 10 years, Apple's operating profit margin has consistently stayed above 24%, rising as high as 32% at one point. But overall, in the last decade, Apple's operating profit margin operating in the mid 20% range, which is excellent for a hardware company, but also excellent when you're dealing with revenues of hundreds of billions of dollars. Speaking of revenue, what I have next is the chart of Apple's revenue over the last decade. You can see it soaring all the way up to $383 billion, more than doubling from the $180 billion it generated in 2015. So you could see the company is continuously innovating, bringing new products to market, and consumers continue to be willing to spend more and more money with Apple, undoubtedly a trait that Warren Buffett appreciates. And finally, to answer if those of you watching today can buy Apple stock or if it's too late to buy Apple stock, I would say it's somewhere in between. Apple stock is trading at a price to earnings, ratio of 29.8, near the expensive side of its range over the last 10 years. So those of you watching interested in getting into Apple stock, my advice would be put it on your watch list and wait perhaps for a better entry point to get in. I would say anything 5 to 10% lower from here would be a good entry point for Apple stock. The next AI stock I'm going to highlight that Warren Buffett owns in his Berkshire Hathaway portfolio is Amazon. Now, notably, Warren Buffett owns a considerably smaller percentage of Amazon stock. Just 0.4% of the portfolio is allocated to Amazon stock. Nevertheless, Amazon stock is one AI stock that stands to benefit from the rising effectiveness of AI. Looking at Amazon's most recent quarter, you can see that net sales increased by 13% to $143 billion, with operating income increasing by more than 5x to $11.2 billion in the third quarter compared to just $2.5 billion in the same quarter the prior year. Of course, Amazon has a few segments. Notably, it has an e-commerce segment where it has the platform, the website where it sells goods and delivers them to people's homes. And it has the AWS segment, Amazon Web Services, that offers cloud services, computing services, and that's where its AI services are also housed and reported on. Amazon stands to benefit from AI across all of its business segments, utilizing it, for example, to improve routing to deliveries for people's homes, potentially reducing billions of dollars in expenses in transportation. Meanwhile, it offers AI services in its AWS segment, and it stands to benefit directly from businesses looking to add AI services to their operations. You can see Amazon also over the last decade increasing its operating profit margin, although it's still only a fraction of what we saw earlier with Apple. Amazon generated a 4.76% operating profit margin, significantly higher than the roughly 1% operating profit margin it earned in 2014. Amazon's e-commerce segment specifically is the one that's dragging down its profitability. If Amazon was just consisting of its AWS segment, the operating profit margin would be closer to 30%. The e-commerce segment is a lot less profitable than the AWS segment. However, the e-commerce segment has a greater potential than the AWS segment. People spend trillions of dollars buying goods, and that's where Amazon has positioned itself to capture a share of that massive retail market. Already, Amazon's position in that massive retail market is paying off. You can see revenue has jumped to $513.98 billion, up from around $75 billion in 2014. Growth remains at double digits for Amazon, which is impressive because people thought Amazon's revenue would slow down considerably in the aftermath of the pandemic. as economic reopening gained momentum. Still, Amazon's been able to sustain this double-digit revenue growth despite the economic reopening, which has impressed investors to be sure. And finally, to answer the question if investors watching this video today can capitalize on Amazon stock, let's look at its valuation. Amazon is trading at a forward price to earnings of 41.17, and while that metric on its own might be too expensive to invest in a stock, because Amazon's growing so rapidly and because Amazon's long-term prospects are so excellent, I would say investing in Amazon stock at these valuations is still a great value. You can still derive a good return from investing in Amazon stock and holding it for the next decade. Of course, nothing is certain in the future and everyone should consider the risks, but overall, I think it would be a reasonable assumption if you were to buy Amazon stock today and hold it for 10 years to expect the value to be higher 10 years from now. All right, so before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you so much for watching.